What's going on, everybody? It's Jeff here. Welcome back to the channel. We have a lot to talk about today. The choppiness is continuing. Today, Monday, is a little bit of a sell-off right across the board. Also, the crypto market is taking a good blunder since its all-time highs on May 10th. In this video, guys, I want to talk about what is happening this week, most importantly on Wednesday, how you can protect yourself from your portfolio getting butchered, and I'm going to give you guys a few good plays that have some great potential going forward. Okay, so stick around, you're not gonna want to miss this. For those of you that are new to the channel, all I ask is you hit that like button and subscribe to join the family. Let's get rolling into it. First off, guys, take a look at the global cryptocurrency. This is the total market capitalization. Currently, it has fallen under that 2 trillion market cap after seeing the all-time highs on May 10th of 2.5 trillion. Not just Bitcoin, but also all of the altcoins that follow along with it as well. It has been overstretched. Okay, a lot of people have been jumping over to crypto as they have seen it be completely outpacing the stock market. But just remember what happened with the penny stocks last year. Every course has to get run and pullbacks are natural. Okay, next I want to talk about what is happening this week. First off, guys, on Wednesday, the Fed minutes from its last meeting that happened in April are set to be released and will be studied carefully to see if it offers any clues on policymakers' thinking. So let's talk about exactly what happened in April and what is going on. You've got inflation concerns amid rapid improvement in employment. Employers are added more than 915,000 jobs in March as the unemployment rate dropped to 6%. However, you still have a lot of small businesses that are having trouble staffing their restaurants because of unemployment, as well as just a change in the positions that people are working in. Okay, the industries people are working in. All right. Also, guys, you got trillions in stimulus spending. All right, Fed Chairman Jerome Powell reiterated that more healing is needed before the Fed does anything that might dampen economic activity. So currently, they are leaving their interest rates low and continuing to spend $120 billion on bond purchases and mortgage-backed securities as well. However, guys, some investors, if you've been following me, you know this, some investors are fearful and don't believe that, that it'll be okay to keep the interest rates at that low because inflation is starting to outpace it a little bit too far. All right. Last thing I want to talk about in this one, as far as like the government, and then I'm going to get into the plays for you guys. As far as what just happened today, there's a monthly child tax credit payment starting for 39 million families, anywhere between $250 and $300 a month, which you have a big side of investors just thinking, how much more spending can we continue to do? Over 40% of all the dollars printed that circulate the United States were printed in within the last 12 months. That just cannot sustain. Okay, our debt continues to rise at an alarming rate, and some investors obviously are fearful because of that. So let's get into what I had also said of some plays that you can continue to take. So one of them I want to talk about, and I talk about this with everybody in the group, guys, is playing the VIX. The VIX is a volatility index. If you look at the last 5-day trend, okay, watch the 5-day trend, and you go over to the NASDAQ 5-day trend, it's literally the inverse. The VIX will rise as volatility rises, as fear in the market rises. As you can see, last Wednesday, was a little bit of fear because of everything that was happening. It reached almost $28. It retraced all the way as the market began to retrace. So playing a small call option on the VIX, or even just buying into the VIX as the market begins to sell off, is a great way to hedge against your portfolio. Okay, this is something I always try to play, whether it's a day trade or a swing trade. Not only just the TQs and the SQs, all right, that are inverse ETFs of each other, that can help hedge a little bit against your main portfolio to be able to get some small plays in there. The VIX is another one as well. So guys, check it out if you have not heard of it. It's a phenomenal play to take. Another thing I want to talk about, guys, and this is what you can do, and this is what I've been telling everybody inside the group. I created a full options course that is available to every single member. All right, I think there's 25 videos. There's over 3 hours that go from the beginner explaining everything about options, what options are, how they work, into complex strategies. So if you're interested, guys, come check it out. So this is a great play to give you guys to, one, hedge against your portfolio and give you an opportunity to own a great stock. So I chose NEO for a couple different reasons. One, I am bullish on this in the long term, and also it is sitting at a great price point. If you look at where it's sitting at the 90-day chart, it has a low of $30.51, and it is reasonably priced that if you were to buy, because we are going to be selling an option contract here, if you were to be assigned to this option contract, you would have to purchase 100 shares, and I feel it would give us a total cost of just a few $1,000s. So let me get into this play, guys. This is basically selling a cash secured put. Considering the market that we've in, I've talked about this, and if you've never heard me say this, I recommend having about 25 to 35% cash on hand in the market that we are in. The reason why you want to have the cash on hand is to be able to add to the dips, be able to sell at some of the peaks, and keep some of the reserves. Having 100% of your money dumped into the market right now gives you no way to dollar cost average, and you are completely over leveraging yourself. We are not in 2020 where my 3-year-old son could have picked a stock and it would have made money. Much different market. Whether you're new to the market, as long as you've been in it in the past few months, you can completely understand what I'm talking about. So in this example, guys, I'm gonna show you a great play that I would take out. This is under NEO. If you jump down to the November 19th, if you're thinking to yourself, NEO is at a great price, like I currently think it is a great price, and I do see the EV market continuing to uptrend, because not only in the future, but also starting to uptrend in the near short term. Talking about the chip shortage might affect these EVs for the next quarter, maybe two, but beyond that, just like every other supply chain issue, it is going to get figured out. So just to give you guys an awesome play right now, NEO is sitting at $33. If you're nervous because the market is volatile, you can do what's called selling a cash secured put. I explain this deeply inside the options course that is available to all the members, but just to give you an overview, you would be collecting a credit, meaning a credit you would get immediately added into your portfolio. So if you were to be selling a cash secured put, you can sell 2 of them right now. And I gave myself enough time frame in order to collect a higher premium. If you think that NEO is not going to touch $30, because if you look at the 90-day chart we just looked at, it has a low of 30.51, you could sell a cash secured put, which would be one contract equal to 100 shares for $4.20. You can immediately get $420 added into your portfolio, okay, and have the option to buy NEO, or if it gets assigned to you at that $30 price point. However, you collected a $4.20 credit, meaning your net would be $25.80. So if you got assigned, which is a risk for any time you sell an option, the market maker could come back to you and say, listen, you signed this contract, it's called assignment, you are required to buy these shares at $30. The price might be 27 or 28. Don't forget, in order for it to be assigned, you have to be below that strike point because you are selling a put. You would then have to cough up $3,000 to buy 100 shares of NEO at $30. But don't forget, you still get to keep that $420 credit, the premium that was collected. If NEO never touches $30, then you immediately just added $420 to your portfolio like nothing. You could also close out of these positions at any time. I'm going to jump over to a website here, and it's called optionsprofitcalculator.com. It's a great way to be able to figure out exactly where you stand. So if you jumped on here, you typed in NEO, I'll go through this real quick for you guys to give you an idea. You would be writing, okay, because when you're buying an option, when you're writing an option, it's also known as selling an option. You would switch that over to write. You would select this option, jump over to the November 19th. You would be selling the $30, or you can do $25. If you're a little bit on the cautious side, you're going to collect a little bit less of a premium, but you could certainly sell that $25 put thinking NEO will never touch $25 and immediately collect, I think it was $225 per option contract. But we're going to stick with the $30 put for this example. Come over here and just run in some numbers. Say NEO goes to 25 at a low, 50 at a high, hit calculate, and it gives you the time frames of where you exactly stand, of what your profitability would be, so long as NEO continues to go and continues to rise, and you can get out of this at any time. So as you can see here, your maximum gain when you're selling an option is the premium collected. But if July you want to get out of this contract, okay, and NEO's at $39, you can get out of it and collect that $227 premium immediately and still make money. If you look at this as well, guys, the probability of profit is just over 70%. Okay, so guys, rewatch this video. take a look at it. Let me know your thoughts. I chose Neo for a couple reasons. One, it's at a great price point, whether it stands at the overall value sitting at $33. As much as I think Tesla's at a great price too, it is deep into the hundreds, and not everybody is going to have $50,000 hanging in their portfolio in case they get assigned. But check out other stocks. Palantir offers a great premium as well, and I'm sure there's a bunch of other ones, but I chose Neo for a couple different reasons. One, it's sitting at that support level, and I'm bullish on it in the long term, and it's something that I think a lot of people would be able to afford if they get assigned. If you are looking to learn more about options, guys, come check out the link down below. Like I said, it's available to everybody. And that's it, guys. That's it for this video. Protect yourself. There's more than one ways to make money in the market. And when markets get like this, you got to learn, you got to switch up your strategies. You can't always just be buying everything. It ain't going to flow that way. Guys, that's it for this one. I'll see you in the next one.